Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Tuesday, the 14th of April. Starting off with an old favourite, Bacanora Minerals, which has behaved itself really since this turnaround in February. Bull flags and support coming in above the 50-day moving average from that time. The best thing about the price action now is that we've got this bull flag here resting above a gap at 80.5 pence. That's the end of day close stop loss on the bull argument at the moment. If we're lucky, the shares won't even go back below the 10-day moving average shown there in green at 82 pence, with a target over the next 2 to 4 weeks as high as £1.20. That would be the top of this rising July price channel. So risking 8 to 10p to try and make another 30p plus. In fact, the shares could actually head as high as £1.40 if this wide price channel kicks in as one might expect. Extraordinary chart coming up in the form of challenger acquisitions. Here we've had the spike to the upside in March, retracement of much of the move, but what's interesting here is that support came in around the 30 pence level, well above previous resistance around the 20 pence level. That could be significant if you like the shares. Stop loss obviously below 30 pence. If you really like them, probably an end of day close just below the 20-day moving average might suffice. That's at 37 pence, and then we're looking for a partial or even full retracement of the move that we have here, back up towards 60, 80 pence and more. So interesting situation. The RSI backs up the positive scenario as well, in the sense that there's been a bounce off or a double bounce off the RSI 50 level. That could be significant in terms of getting the shares going again to the upside. But as I said, stop loss back below 30 on the whole thing. Ideal scenario, not back below the 20-day moving average on any significant basis. Comms as a stock looked at. I think last week there was one final move to the downside below 0.5 pence, but that turned out to be basically the low of the move. That may turn out to be the low of the move. In the short term, we'll have resistance here from 0.8 pence. That was actually came in on Monday, and end of day close back above that would be the real kicker in terms of the recovery argument here. Otherwise, if you're aggressive, you remain either buying into any dips towards the 10-day moving average, currently at 0.58 pence. So interestingly placed there for comms at the moment. Best scenario would be that back above 0.8 pence we head back towards 1.5 pence, which is the floor of this March gap to the downside. Richland Resources, a stock which is currently looking rather encouraging. As you can see here, the shares have sort of shot through their 200-day moving average at 2.49 pence to start April. I'm rather optimistic about this situation, given the way that we're in the run-up to a likely golden cross buy signal between the 50-day and 200-day moving averages. 50-day line shown there in blue at 2.2 pence. Best case scenario the next couple of months is that we head up towards the top of a rising July price channel as high as 7.5 pence. Obviously, at the moment, the shares are very overbought, RSI 92. But that hasn't actually stopped them progressing before. We've seen quite high peaks for the RSI since February. Any dips towards, let's say, the 10-day moving average around the 3 pence mark over the next week. 3 pence was resistance in November. Any dips towards that zone would be regarded as buying opportunities at the moment, and really only back below 3 pence on a sustained basis regarded as outright negative, or at least delaying the significant upside scenario here. Sefton Resources, stock which has been bubbling up and bubbling under for quite a while. The bad thing about the price action in recent months is the way that every time, or the recent past, every time we've hit the 200-day moving average, that's the black line here at 0.12 pence. That's turned out to be a bull trap. What's encouraging about the current scenario is that we're finding support over the last 3 or 4 sessions now, well above the 200-day line. Little bull flag breakout here as well through 0.15 pence. So that does suggest that we're nearly ready to deliver a decent move to the upside. 0.3 pence is the obvious resistance over the last year. Stop loss on the buy argument if you're not that sure would be from 0.12 pence and below. You can see this extended RSI support line here, which does suggest that there is finally momentum here. But obviously, look, we are wary that the shares may do the same as they did in January. So enforce stop losses relatively strictly. Finishing off with Xtract Resources. Similar chart in some ways to that of Sefton, in the sense that we've got this bubbling under or bubbling over the 200-day moving average. That's at 0.16 pence. That's a stop loss on the bar argument at the moment. Extended RSI support line there from December as well. So we should be in a mid-move consolidation that takes us up towards 0.4 pence as a target for the next 1 to 2 months. That would be the top of a late 2013 price channel target. Stop losses, as I indicated, below the 200-day moving average. That's it from me. More updates at masterinvestor.co.uk.